Travel agencies represent an industry marketplace where prospective travelers have the ability to shop for air, car, and hotel products for leisure or business purposes at low prices. The U.S. travel services industry includes about 17,000 companies with combined annual revenue of approximately $40 billion for the online travel industry alone. As the economy moves into recovery and traveling trends pick up, growth in this industry has gone from physical establishments to web services as consumers enjoy booking trips online for its flexibility and efficiency. By the end of 2012, online travel bookings will represent almost a third of worldwide volume, and in 2012, revenue is forecasted to grow by a low double-digit percentage figure. Hotels were booked the most in 2011, followed by flights and travel packages. This number of bookings is expected to triple by 2013. While there are thousands of online booking companies, the two most prominent in the marketplace are Expedia and Priceline. As the market grows, companies continue to make acquisitions and differentiate themselves to make the big companies even bigger. But how can you distinguish which multi-million-dollar company is the more successful one? To follow, we will be discussing the marketing, customer service analysis, and statistics of both travel agency giants in order to decide which online travel agency will continue to prosper the most.
Priceline was founded in 1997 by J.S. Walker. It began operating on April 1998, getting 600,000 hits on the first day of its opening. Priceline is an online travel service provider that offers leisure air ticket, hotel rooms, rental cars, package vacation, and cruises. They are best known for the name-your-own-price booking method, where flexible travel plans are the key. Priceline's engine allows users to quickly narrow their searches through criteria such as availability, rates, and personal preferences. Expedia was founded in 1996 and was first started as a division of Microsoft. The chairman is now Barry Diller. Expedia was originally named Ticketmaster until 2001 when it was purchased by Interactive Corp. Similar to Priceline, Expedia allows you to book your car rental, plane tickets, hotel room, and train tickets online. This website works with other websites such as Hotel.com, Hotwire.com. The headquarters of Expedia is now in Washington. According to the 2010 annual report, Expedia's business strategy is to facilitate travel for leisure and business purposes. The company focuses on providing the best resources for travelers by utilizing their knowledge of destination, activities, and suppliers. Expedia competes with many online and offline travel companies that target leisure and corporate travelers. In order to compete with these companies, Expedia believes that they must maintain and enhance their brands in terms of quality and overall value.
Expedia and Priceline are both major online traveling booking sites. Expedia boasts to be the #1 travel site empowering business and leisure travels with tools and information to build a travel experience. Expedia's marketing strategy is to focus on how and where you book. In 2010, Expedia implemented a new branding campaign, Where You Book Matters, displaying the interactive and comparing options on the website. Expedia's online strategy to create multiple travel sites and invest on ads in search engines enables Expedia to be seen more publicly and draw consumers to the Expedia website through links. Expedia uses 36% of revenue to pay for sales and marketing, whereas Priceline only spends 6.1% of total gross profits. Furthermore, Expedia combined with AARP to attract more leisure travelers, offering AARP members further discounts on their bargain prices. Priceline's earnings have picked up since combining with major European and Asian booking sites Booking.com and Agoda.com. Booking.com is the largest and most renowned travel booking site in the world. Though Expedia holds hotels worldwide, the site is only well known in the US, the UK, and Italy. Priceline's 3 primary brands take over each sector of the world, and according to Forbes, Priceline is an unmatchable international growing company.
Expedia emphasizes its generic travel boom and highlights its full range of services and destinations. Priceline itself focuses on the lowest price for all their services and destinations and claims to set prices 50% lower than Expedia.
Priceline's fun and interactive iPhone app also beat out Expedia's generic and bland app, reflecting in their sales. Furthermore, as Expedia shifts its branding campaign, Priceline is also adapting. The humorous negotiator character played by William Shatner, the spokesperson for Priceline for 14 years, is being killed off in upcoming commercials to reflect the altering business model of Name Your Own Price.
Expedia saw an increase in revenue from 2009 to 2010. Expedia Inc. pulled in $3.348 billion in total revenue, which is significantly more than the $2.955 billion the company made in 2009. This 13% change is primarily due to the increase in worldwide hotel revenue in the leisure segment of the company. Most importantly, Expedia has $2.6 billion in long-term debt as of December 31, 2010. $232 million of which is owed in the next 1 to 3 years. Priceline saw an increase in revenue from 2009 to 2010 as well. Priceline received $3.084 billion in 2010 compared to the $2.338 billion in 2009. Although total revenue for Priceline was less than that of Expedia, overall growth of 31.9% in revenue from 2009 to 2010 for Priceline is greater than the 13% growth in revenue from Expedia. Priceline has $799.9 million in long-term debt, $75.5 million of which is due in the next 1 to 3 years. This is significantly lower than the $232 million Expedia owes in the next 1 to 3 years.
According to the Forbes earnings preview for Expedia, analysts are split on this company and 37.5% of them rate Expedia as a hold. As of February 3, 2012, stocks are down 17.3% since November 8, 2011. Although the consensus estimate is 62 cents, up from the 58 cents per share from a year ago, this is down from the 71 cents per share in December. Analysts are also expecting earnings of $3.10 per share for the fiscal year, compared to the expected $4.79 per share for Priceline.com. Revenue for Expedia is also expected to be significantly lower than that of Priceline.com. Expedia's revenue for the fiscal year is expected to be $3.47 billion, much lower than the $4.33 billion in revenue for Priceline.com. Expedia's revenue has grown by double digits year over year. However, the company's net income has fallen by an average of 0.3% over the past 4 quarters. From this data, it is clear that both companies are growing in terms of revenue. Priceline.com has seen significant growth in profits and net income that Expedia has not. In terms of financial success and profits and growth, we expect Priceline to outperform Expedia in the financial market.
According to the American Customer Satisfaction Index commentary from February 2012, travel websites for booking airfares, hotels, and car rentals are unchanged at an ACSI score of 78. Expedia's rating fell 3% to a 77, and Priceline's rating increased by 4% to a 76. Priceline's gain overrides its decay from a year ago. Over the past few years, Priceline has moved away from its name-your-own-price approach towards a more conventional travel services model, and the results have been mixed so far, but this year's upswing may indicate that Priceline might be on the right track. Investors seem to have taken notice as Priceline stock is up 24% from a year ago. According to the Customer Service Scoreboard, Expedia has the best overall customer service rating when being compared directly to Priceline. Expedia has had 536 total customer service ratings, of which 49 have been positive and 487 have been negative. This has resulted in an overall classification of disappointing. While Priceline, on the other hand, has had 808 total customer service ratings, of which 46 have been positive and 762 have been negative. This has resulted in an overall classification of terrible. Both sites have made efforts to improve customer satisfaction by implementing outside partners to enhance the online experience, and both companies have experienced success from the changes they have made. A report released in 2010 done by 4C Results suggests that the online travel sites Expedia, Travelocity, Orbitz, and Priceline did a better job satisfying customers overall in 2009 as compared to 2008, and that Expedia did a slightly better job than all of the other 3 analyzed in the study. In looking at the following chart, we can see that the companies rank rather evenly in the overall star rating, which judges the following fields: issue resolution, reachability, cancellation, friendliness, and product knowledge. Neither company received higher than 2 stars in any of the categories and thus are very comparable in customer service. In looking at the following graph, we can see that Expedia's overall customer service rating has decreased significantly since 2009 and fluctuated in between 2009 and 2012. Although Priceline's ratings have shown to be below that of Expedia's for the most part, they have remained consistent, which is the key factor of importance.